Are markets getting frothy? Expert insights. Are financial markets becoming overheated? Have you noticed the buzz in the financial world lately? There's a growing conversation about whether traders are driving prices up to levels that may not be entirely supported by the actual values and fundamentals of the assets. Should we be worried about this trend? In a recent discussion on the Marketplace Morning Report, host David Brancaccio engaged with Barry Ritholtz, the chairman and chief investment officer at Ritholtz Wealth Management based in New York. Below is a summarized version of their insightful exchange. David Brancaccio: the stock market appears to be on an upward trajectory, and it seems like many investors are adopting a mindset of being risk-on. It's as if the market is soaring to new heights, with stock indicators rising, meme stocks making a comeback, and Barry Ritholtz: what you're describing has been a recurring theme in the market since we hit the lows back in March 2009. We've witnessed the rise and fall of meme stocks and the explosive growth of cryptocurrencies. What's particularly interesting is that for the first time in many years, emerging markets are performing well. In fact, European markets are significantly outpacing the United States in terms of returns. It's essential to broaden our focus beyond just the US market, even though it remains the largest and most influential segment of the global equity landscape. When we analyze earnings, it's challenging to label the current situation as unjustified exuberance. Just look at companies like Microsoft and Facebook. Their performance has been exceptional, which explains why their stock prices are reaching or nearing all-time highs. Brancaccio: some investors might argue, I've seen great returns since the market turmoil in April, but I'm starting to wonder if it's time to cash out and take my profits. However, this approach can resemble market timing, which is notoriously difficult to execute successfully. Ritholtz: we've experienced numerous all-time highs, and each time we reach one, I receive a flurry of emails expressing concerns that the market appears to be peaking or frothy. In response, I wrote an article detailing the historical context of all-time highs and why markets often continue to perform well after reaching these peaks. The feedback was quite mixed. Interestingly, that article was published in Bloomberg back in 2014. Imagine if someone had decided to exit the market back then, thinking it was at a peak. They would have missed out on significant gains over the past 60 to 65%. Predicting when the market will reverse is incredibly challenging, if not impossible. While I don't want to downplay the existence of potential issues, it's important to note that, on average, low inflation and low unemployment make it difficult to adopt a pessimistic outlook on the stock market as a whole. What do you think? Are we witnessing a market bubble, or is this just a natural phase of growth? Share your thoughts in the comments below.